Hello, Maverick Traders. Nice to see you here. This is Rob Reinhold. Ankit Sharma is with me as always, and we are here at the last week of April. So April's been a great trading month. It has been a fantastic trading month. We have seen just really good moves across the boards and mostly in foreign currencies. Forex has been the bright spot here, while the cryptos have been not as good. So let's talk about what we saw in the news last week. So we're now down 5% for the months. We've had 3 consecutive losing weeks, and there's weakness across the board. And this week was really tough because there were 2 to 3 days in there that looked really bullish at the start of the day. And by the end of the day, it was negative, and then runs up and then turns around and goes negative. That's really negative price action. Probably the biggest thing that happened, on Wednesday, Thursday was the US bond yields kept going higher and higher and higher. And what that did is that spooked technology stocks. And tech started to sell off, and then the rest of the market just simply followed it back as well. We had a surging dollar this week. Dollar was the best performing currency. It had a great week. And the dollar and commodities are inversely correlated, so we did see some pullback in stuff like gold and silver. We got a lot of inflation reports out of Canada, higher than expected inflation. The CAD actually did really well the first 3 days of this week. And then it actually got hit a little bit on Thursday, Friday. But CAD, I know we made some CAD Swiss franc trades on Tuesday that were just really nice. Then we got the CPI out of New Zealand, which was lower than expectations. Now, don't get too excited about lower than expected inflation. This is month over month, 2%. That's not good month over month. And China GDP came in a little bit better than expected, but I've actually been reading that they are lowering China's GDP forecast down next year to somewhere around 3.5%, which is, it's really never been that low. So let's take a look at all the charts. Let's see where we ended off at the end of last week and really get ready for the week ahead. So as we talked about earlier, we had drops across the board. Equities down anywhere from 2 to 3%. Crypto was down, but it was not down as much as it could have been and it should have been. Gold got hammered, and oil, usually this down 1.6 would be a big move, but lately we've been getting 7, 10, 15% moves in a week. This was like flat. This was kind of flat. But overall, what I really want to focus on is the price action of this week. We had Monday's action that came after a really nasty day on last Friday. And it was a pretty tight candle, and it went down and went up, pretty tight candle. The next day, the buyers came in, and they came in hard, and they bought all day, and really closed it up at the high. It gapped up the next day and sold off. Okay, that's not a terrible candle, but it's telling you that, hey, there's still some sellers out there. This is the one. I think Thursday was the day that anyone who was optimistic that there was going to be a bounce, by the end of the day Thursday, we gapped up. We gapped up substantially, like 1%, and we lost it all, and then we closed down almost 2%. And then you can see Friday's candle. It is literally, it never went up, and it closed at the lows. So big selling. The question is, how long is this selling going to last? We'll talk about that here in a second. Let's take a look at all the currencies individually. And you can see that dollar was super strong this week, up 1.4%. And look at the euro. The euro is up nicely as well. And, I could see people scratching their head a little bit on euro. There was nothing but bad news out of the war in Ukraine and its effects on Europe. But the euro actually acted really well. The one I wanted to point out as well is Canada, the Canadian dollar. It was very strong. If we close these numbers on Wednesday, the CAD was up well over 1%. It gave some money back on Thursday, Friday. What was weak? Well, Aussie, Kiwi were weak, and they really just got hit with risk trends. So when we look at what happened, this is just a pure risk-off move. They were actually stronger early in the week, but when the markets turned hard, it really turned hard on Aussie Kiwi. The yen, if we checked on the yen in the middle of the week, the yen was down 1.5% in the middle of the week. it got a boost from the risk off trends. People did like the yen when the markets are selling off, so it recovered. But ultimately, there's no question dollar is the best looking currency at the moment, followed by the CAD, in my opinion. If we go over to cryptos, you can see really mellow week by the end of the week. We had moves up, moves down, but at the end of the week, we didn't really go anywhere. We talked last week, we don't really love cryptos here. It's not the right market environment to be long cryptos. So we took a look at the S&P. Let's go ahead and upgrade our outlook from a -1 to a -2. Last week, we said the market is mildly bearish. And at the end of this week, it is moderately bearish, if not heading into full-on bearish pretty soon. If we take a look at this chart here, we could see potentially a retest of these lows. There's no question that, technically speaking, this is the next level. What do you think about this, Ankit?
Yeah, this is where I think as we look at the charts, we are aiming for the March lows, and that's what's in sight here, and there's not a whole lot that's in between those two areas. So I do think any meaningful support that we can find, the March lows is what we need to take a look at. So it could get worse if you break that support, or it could actually try to find a sort of short-term bottom here. So I think from here till there, like there's that big area that we could easily get towards in the next coming week.
And you and I were speaking earlier, and I said I could easily see us having a really nasty Monday, Tuesday, where we basically fill this area, where we have two big down days. We get down into this area and probably even pierce below it, but then actually have a bounce off of that. And I said that the worst thing that could happen next week would be about like what happened this week, when the first part of the week, the market just plodded along, but then lost all their gains. And then at the end of the week, it just gets hammered again. So I think best case scenario in the market is if you're looking like for a good trading long setup, I think you want to see it really down big the first 2 days and then try to go in and buy that capitulation bottom. Being short over the weekend, this is where you want to be. Being short at the start of the week, this is where you want to be. But then realize that we've had two really big candles, really intense days. Usually you get reversals after really intense days. So I do think that you do need to be conscious about when we do get some more weakness, all of a sudden now we have to start thinking about, okay, we're probably at the end of this range and it probably needs to bounce or base before we see any more. If we take a look at the world index, the VT, same thing, just a nasty, ugly day. Look at this, gap up, fall, gap up, fall. That's nasty. It looks like we're headed back towards February lows on the VT. And if we take a look at the cryptos, ever since we broke below this 50, we said, hey, you know what? Cryptos are just not looking that great. And look at this. This is just such a wimpy bounce in here. And look, we're actually down at the low here. It would not surprise me at all to see cryptos break and come down to the next level. That's about 6% away. So not a lot of good things to say about crypto here. We take a look at the calendar for next week. All right, we do have elections. Elections always have consequences. This one's a little bit different though, because we're talking about the French election. You know, France's economy is probably something like 15% of the Eurozone. It's a big chunk, but it's not everything. So this presidential election won't be as important as like when we saw in the US president election or in the New Zealand presidential election a few years ago when the Kiwi just rocketed for like 2 months straight. So I don't think you really need to worry about that. As you can see, bank holidays on Sunday night. So we expect Sunday night's trading volumes to be really down because, again, these are the banks that are most actively trading those sessions, and they're going to be closed. We get a little bit of central bank speech from Bank of Canada. We've got CPI out of Australia looking for 1.7. I think that is a good trading number. If you want to look at the calendar and say, okay, what's the best trading number out there? I think that the potential for a good trade around the Aussie CPI on Tuesday night is probably the best looking one. We've got US GDP. I don't think anyone cares about last quarter's GDP. So much has changed just in the last month or two that what happened in January and February is just not relevant at the moment. So I think you can pretty much ignore that. But I don't think you can ignore this core PCE price index. This is the Fed's favorite measure of inflation. And this one is definitely going to be looked at. And if this thing comes out a lot hotter than expected, I think you're going to see bond yields crack over 3% on the 10-year. And I think that really does hurt technology stocks. So next week, not a whole lot from central banks. And we do think the equity markets overall are going to be heavy. Let's go ahead and look at all the currencies one by one and see which one looks the best to go long and the best to go short. I'm going to go really quickly through cryptos here because we don't love the crypto basket. And when you take a look at charts, it's not a great looking chart. We've got nothing but bearishness here in Bitcoin. So for us, Bitcoin, if you can go short it. If not, just stay away. Ethereum looks better than Bitcoin. It at least got back up into the range between its moving averages, but you can see it turned down hard. We expect Ethereum just to follow along with the rest of the currencies as they go lower. That was Bitcoin Cash. This is Ethereum. Ethereum looking like the same as Bitcoin. That it looked like it tried to hold on for about 2 or 3 weeks, and now it looks like it's heading to lower levels, 2,500 on Ethereum. Here's Litecoin, bear rally. This is just a classic bear rally. Nothing good here on the long side, and you can see little low base forming here, and we've got a lot of velocity to the downside. Ultimately, all the cryptos are a sell. They're all a sell where we are right now. So let's go into the foreign currencies and take a look at dollar. It is, once it broke out, and we've been tracking dollar for a long time that was simply trapped in this range literally since December. It had been going sideways for 4 months. We got a confirmed breakout, and we even came back and retested that breakout. This is a very strong trend. This is about the strongest trend you can get, a breakout of a 4-month high base, and you can see the velocity. Everything's saying this thing is going higher. So we do like dollar going into next week. The yen. Now, look at this. Very rarely do you get a -3 trend score and a +3 velocity score. But that's where we are. The yen's been very, very weak. It's been sold off for months and months and months. We've had risk-off moves over the past couple months. And short term, it does help the yen a little bit. But ultimately, the sellers come back in and drive it down. There's no question that we just made a bottom. We just made a bottom. Where does this run go to? I'm not sure. I'm not sure where it goes to. Maybe it makes it up to this resistance area. Maybe it makes it up even a little further. If I had to trade yen right here, right now, I would have to go with the short-term velocity score of +3. I'd have to go long. I don't think it's a great long because I think it's a ticking time bomb. If you get in it, it's only a matter of days until it falls over and does what it's been doing for the last 4 months, because the Bank of Japan is absolutely doing everything it can to push this yen lower. So for me, yen, if someone said, Rob, I want to go long yen this week off of risk off, I'd say, look, why don't you just go in the dollar? That's a safer trade. It was strong when the market was strong. It's strong when it's weak. But okay, maybe yen would be acceptable. I still like dollar better. Swiss franc did get some benefit from the risk trends. Swiss franc is a defensive currency as well. You can see, come back up, but the trend isn't great. We're right back to the moving averages. Yes, we've got some nice velocity to the upside. I like other currencies better than Swiss franc. So for me, Swiss franc is just on the back shelf. Here is euro, and euro's a little bit interesting here. We've got kind of a wedge that is formed, and it's now showing, for the first time in a long time, showing some signs of life that it wants to go higher. Now, we don't have a great trend score yet. We need to clear out of these moving averages. I would love to see a retest and then a bounce higher, that would be a real sign that the trend has changed. But we're starting to get new signs that it is changing. Velocity looks fantastic on this. I mean, look, runs, bases, runs, bases, runs, beautiful price action. These are the best because you don't get stopped out on these kind of trades because there's no pullbacks. They just go sideways for a while. I do like euro. So if you're going to rank your favorite long currencies, dollar number 1, euro number 2. Pound, right in the middle. Again, it's not giving us anything in a trend score, but it's giving us the first signs that it's stopped going down. That's what we know for sure for the pound, is it stopped going lower. Is it going to go higher? We don't know that yet. All we know is it stopped going lower. Until we get some clarity, pound for me is a no trade. CAD was my favorite currency coming into the week, and it treated me very, very nicely at the first part of the week. Really strong moves. And then we got the risk off trends that push it down. But look how great it held in there. I mean, look at these two candles. Two little dojis, nice candles. I expect CAD to probably fall a little bit more, but CAD is number 1 on my list when the market bottoms out. So I don't want to be short CAD, but I don't want to be long it here either. I want to wait for the equity markets to be more of a risk on, and then CAD looks fantastic. On the short side, Aussie, we broke some pretty major support. The thing is, we still got a decent looking, we haven't broken trend lines, we haven't broken all these things, but the velocity sure is telling you in the short term, this is going lower. And you can say the same thing about the Kiwi. Now the Kiwi is further along, and we have now broken below the 50 period moving average, which is my line in the sand. We are now below the 50 moving average, which says you want to be short. And you can see this thing's got a lot of velocity. So if we take a look at trend, we've got just two really strong trends. Dollar, yen. CAD looks okay. Aussie looks okay. But outside of that, that's really what's trending. Everything else is kind of mixed in the middle. But when we take a look at velocity, like what's happening shorter term, it's either you're super strong or you're super weak. And so this is where you want to be looking to trade. I like dollar and euro on the long side, and I like Kiwi, Aussie dollar on the short side. And this was the trade that Anka gave out on Thursday. It was a great trade, short Kiwi dollar. I think you want to stay with that until this velocity changes. When the market bottoms out, CAD goes to the top of my list. So that's what we're looking to pair together. So dollar CAD, I think that's what you want to be looking for. And then bearish, Kiwi is number 1 on my board. Okay, what are your favorite currencies this week?
Hey, Rob. Well, as we look at this price action, one thing I want to point out is that we are now finally seeing the price action that is very correlated between the currencies, and now we're seeing correlate with the equity markets or with the risk trends. So I think as the risk trend stays in trouble, we want to be short the Aussie, short the Kiwi. Again, if you look back in the past couple of months, I mean, we have seen those trends totally broken from each other, and now we are seeing they're back in sync. So as we are getting that correlation back, I think the dollar would again stay as the currency of choice right now. And the Aussie and Kiwi and these currencies will probably stay more weaker. And again, they had a lot more grounds to give as well because they had phenomenal rallies in the past couple of months. So I think that's where they're more risk. Outside of that, I think the yen is really the big hot topic. I know I have received a lot of questions because if this risk-off sentiment is taking place, would the yen can get out of that little shorter term, the weakness? And I think that's something we need to pay attention to. I think it's not a great time as we're seeing the markets really start to get worse. I think it's not a great time to be short the yen. I think yen has been very extended, but there's definitely more upside potential that we can see with the dollar, especially in a couple of weeks. We have the FOMC rate decision, and again, they're expected to hike rates. I think that will likely to keep the dollar elevated, which in turn will keep a lid on some of the growth currencies. So that's what I'm looking at, Rob.
Let's take a look at some potential trades. This is my favorite one, Kiwi to the short side, dollar to the long side. So short Kiwi dollar. We had a monster move from 68 down to 66.3. That's a 170 pip move on a 70 cent currency. That's a really big move. That's like a 2.5% move down. I'm not a big fan of entering positions when something's 2.5% down over the last 2 days. I'm going to need to see a bounce or a base before I can get into this. So while this one was top on my list of saying, hey, this is the one I like the most, when I take a look at it on a 4-hour chart, it tells me, hey, you need to wait. It's just not ready at the moment. So let's check some other trades out. Here we've got Aussie dollar, and basically take everything I just said and recycle it for the Aussie. Big fall. These are not great entry points. I want a base or a rally to sell into. So the two at the top of my board say, hey, get ready for this. They're actually no good at the first of the week. Let's take a look at something like dollar Swiss franc. We like dollar long. So dollar long looks great. The problem is Aussie and Kiwi they don't look like great shorts here because they've already gone down so much without any relief. I like dollar. And so I want to think, okay, what do I want to pair it up with? I want to pair it up against these two overextended ones. What's one of the weaker ones? And Swiss franc was one of the weaker currencies. And you can see here on a 4-hour chart, it's saying, hey, this thing's rocking and rolling here. So the only question here is entry point. We already kind of missed a high base here. So again, pullbacks, bases, dollar Swiss franc, I think you want to be a buyer. I'll throw out pound dollar. I think pound is just on the cusp of becoming a more bullish currency than bearish. But right now, when you look at it, it's in the middle. So if I want to be long dollar, but I don't want to be long dollar against short Kiwi or short Aussie, I've got to find some other currencies. And so Swiss franc and pound, I think, are some alternatives to that. But same story here. Big move already. I need to see bounces and bases. So ultimately, all my favorite ones are a wait and see what happens at the first part of the week. So I am not looking to be active at the first part. Ankit, what are you looking at?
Hey, Rob, well, you definitely covered the ones that I was looking at, but there's actually a couple out there that I've been talking about, and they actually work really well because, again, we're focusing on relative strength of weakness. Aussie CAD, looking at just the Canadian dollar against the Aussie and the Kiwi. Again, this is where we've seen that correlation, the relative strength of weakness have kind of turned. And you can see, it's been a very orderly move, and we have gone from 94.50 down to 92. But as we zoom out to a daily chart, again, we have further downside risk in these pairs. And again, I like the fact that we were in an uptrend. We've seen a bit of a broken that trend, had a bear rally, and then here the last two handles are pretty weak. So again, these are the slower pace moving currencies. But again, if you're trying to avoid some of that market volatility, then I think Aussie CAD and Kiwi CAD do look actually really well here. So I do like it in the further, as they cast out, keep outperforming. I think we can again pair these two currencies, and they're slowly moving. But then we have the trend line sloping down. We have a lot more of the orderly, bear rallies that are being sold off. So this is telling me that there's more further downside risk in those currencies. But outside of that, I think we can also take a look at Euro Aussie and Euro Kiwi. Again, just an alternative to dollar. We're noticing quite a change. I mean, look at the base that we were actually in, and we actually seen a nice little breakout off that. But most importantly, if we take a look at daily charts, I think that's where we are now noticing a trend change. So for the most part, I mean, look at Euro Aussie, where it started off this year and where it is. I just think that if this can continue further, 152 is very much in sight. So again, this is a kind of deviating from the dollar pairs or the yen pairs, but I think the euro has started to worth taking a look at now. And considering how much it's kind of sold off this year, I think regardless of what's happening with, the geopolitical concerns, I think just looking at the price action, these are also the areas that we have not looked at on the upside, but I think is worth taking a look at. So these are the picks that I'm looking at, Rob. But again, I think next week will be one hell of a week because we are now, as we close off the markets today, if we close off at the lows of the day, it's not really looking good for next week, but I think volatility is what we're likely to see going forward, and that's where we need to be making adjustments based on the market movements. So that's my outlook, Rob.
Your analysis on the Aussie CAD and Kiwi CAD pair are perfect. You know, the ones I'm looking at, Kiwi dollar, Aussie dollar, they had the big explosive move to the downside, and I can't sell them here. But you're right. Those two, Aussie CAD and Kiwi CAD, are just creeping lower. And those are sometimes easier trades to make because they don't have a lot of bounces. You don't get stopped out much. They're just drifting lower. So I think if you're looking to find some trades for the first part of next week, I think go with Anka's suggestion, Aussie CAD short and Kiwi CAD short. To wrap everything up, we think we're likely to retest those March lows, probably get there earlier in the week and possibly have a decent little bounce off of that. We'll be meeting twice this week live, once on Wednesday as usual for the midweek update, and Thursday we're going to be doing a trading Q&A class. And periodically we put these on the schedule, and it's just, hey, you know what? Let's answer your questions in a live format. What we'd like you to do is send your questions to us before the class. You should have Ankit's email address, ankit at maveriktrading.com, or mine, Rob, R-O-B-B, at maveriktrading.com. Send us your questions, and we'll cover them in that session. If you cannot join us live, we will absolutely be recording the session so you won't miss anything. Thank you so much, everyone. Have a great weekend and stay safe. Goodbye, everyone.